The primary purpose of this podcast is to educate and inform. The views, information, or opinions expressed by hosts or guests are their own. Neither the show nor any of its content should be construed as investment advice or as a recommendation to buy or sell any particular security. Security-specific information shared on this podcast should not be relied upon as a basis for your own investment decisions. Be sure to do your own research. The podcast hosts and participants may have a position in the securities mentioned personally through sub-accounts and or through separate funds and may change their holdings at any time.
Welcome to This Week in Intelligent Investing, where we examine timely and timeless investing topics to help you become a better investor. Enjoy authentic, unscripted discussion featuring Phil Ordway, Elliot Turner, and other thought-leading investors, brought to you by MOI Global. And now, here's your host, John Mihaljevic.
Welcome, everyone, to a new episode of This Week in Intelligent Investing. Great to have you with us, and also great to have my co-hosts, Phil Ordway and Elliot Turner, here as well. Just a quick announcement. We're going to take a couple weeks break for the holidays, but we will release a couple of special episodes instead. And stay tuned for those. And also want to wish everyone happy holidays and a great new year. Now let's just get started. Phil, over to you.
Great, thanks. I thought, given that it's the end of the year, this is the last time we're going to be recording something in 2021. It's forecasting season, or idiot season, as I like to call it, when everybody trots out their year-end prognostications about what's going to matter and where prices are going to be and all that kind of nonsense for next year. I thought I'd revisit one of my favorite things and topics in that regard, which is the book and the concept Superforecasting by Phil Tatlock and the project he's put together over at the Good Judgment Project. And it's called, the website's actually Good Judgment Open, jgopen.com. And there's a lot of really interesting stuff up there. So I thought I'd walk through a couple of the more interesting ones that are up there and kick off a little bit of a debate as to where those numbers might make sense, where they might be a little bit off. And I think, as always, the lesson that I'm taking away from this, and we'll probably circle back to this with Elliot's segment in a minute, is that we all, me included, need a lot more humility in our forecasting. We need a lot more wider range of estimates. The error bar needs to be a whole lot wider. And, that we just can't predict a lot of things that we think we can. And one of the ways that jumps out at me was that some of the more prominent forecasts that are up on the Good Judgment Project right now are where the U.S. 10-year Treasury yield will be, where the S&P 500 will be, is near out as the end of June 2022. So I thought this part was particularly interesting. Where will the S&P 500 index close on June 30th, 2022? And for reference, today it's a little over 4,700. At least when I looked earlier this morning, we're recording this on December 16th. So what do you guys think? If you had to put an error bar around that, you can give a few ranges. Why don't you throw out a few things and I'll tell you. And look, by the way, with all of these, feel free to just say, I pass, I don't have a clue, or I don't even want to put a number out there. And then the point of it will be more the numbers that are coming in from the super forecasters and the general public on jgopen.com. But what do you guys think?
Yeah, I mean, why not put myself out there for something with no skin in the game? I'll say,
exactly.
So we're talking mid-year. So by mid-year, we'll be at 4840 on the S&P with a low of, 4575 and a high of 4900.
Interesting.
I'll just give you a point estimate, Phil, because I'm that good. I don't need a range. I'll just say 4,200.
Interesting. Well, see, that's what I find so fascinating here. I certainly don't have the first clue, and I wouldn't stake literally a single dollar on a forecast of mine in this regard. But fully half of the people responding expected a gain between now and June 30th. So 34% of respondents said we'd be somewhere between 4,700 and 5,000. And a full 16% said we'd be over 5,000, which I believe would be like a 7% increase between now and 6 months from now. which is a pretty healthy gain, right? I mean, in my opinion, that'd be a pretty healthy over-under for a multi-year return. And only 1% said we'd even be below 3,800. Actually, it was a little less than 1%. And only 7% said we'd be between 3,800 and 4,100. So, John, that clearly, and I guess 14% were in the 4,100 to 4,400 range. So it paints a pretty optimistic picture. I think that foots pretty well with what we're seeing in the rest of the market. But then, interestingly, from a different source, actually, Ed Borgato put up on his Twitter feed a poll that said a magical genie comes along and offers you a guaranteed after-tax 7% compound return for the next 3 years. So 2022, 2023, 2024. But the trade-off is you must lock up. You can make no other investments during that 3-year period. Would you take it? I know I voted yes, that I would actually take that 7%, even though I hope I can do slightly better than that, but I think that will potentially outperform the broader market by a couple of hundred basis points. So I said, sure, I think 7% would be enough to entice me to sign up for that. What about you guys?
That's a bit harder. I'd say like take it in half of my book and then work on the rest of it.
Yeah, that's why it's a tricky
terrible
trade-off.
answer.
So
but
that's a tricky trade-off. You have to lock up 100% of your investable assets for 3 years. You can't do anything else. That was the deal.
Yeah, I would not lock up 100% for 3 years. No.
Yeah, I agree. Well, it's tough.
I also wouldn't, but it's totally inconsistent with me thinking the market's going to be lower.
Well, not necessarily, because then you could go then redeploy at lower prices, right? So that's the appeal, and that's why I would always turn something like that down in real life. But I think the point stands that expectations are pretty darn high, and likewise, the implied probabilities that they seem to have here. So the same group back on the Forecasting Open was asked what's going to be the highest market cap of a publicly traded U.S.-based company on June 30th. So similar to the S&P 500 question, I had to look these numbers up because it was just so astounding. The top 4 candidates are Apple, Microsoft, Google, and Amazon, with other as an option, but literally not a single person cast a vote for other. And the numbers right now stand at Apple at $2.875 trillion, Microsoft at $2.485 trillion, and then Google and Amazon both a good bit below $2 trillion. So it really would take quite an earthquake to boost Google, by almost 40%, or to add another trillion to Amazon, a trillion plus to catch Apple if Apple just stood still. And so Apple is actually getting about 60% of the vote there, and Microsoft gets 39% of the vote. Google and Amazon get 1% each. And that's truly kind of astounding. I remember the episode when we talked, I think it was earlier this year, about the market cap leaders and what are the top 10 and top 20 companies by market cap over long periods of time. And we all agree that the turnover is real, the turnover is high. Who's going to fall from grace over the next 10 years? And the interesting thing is, who's going to come from nowhere? And we all kind of zeroed in on maybe a payments company, like if Stripe, were to really grow, you could see something like that joining the ranks of the top 10 global companies or US-based companies by market cap. But what's going to unseat a company like Apple or Microsoft? And what are the implications if Apple or Microsoft do stumble and $1 trillion of equity value just evaporates? Like it's pretty stunning, right?
Yeah, it really is. I'm curious on the first question. Do you have an idea for context how the good judgment people skewed last year? Like, are they just...
No, I wish I did. And I should have given a caveat too. There's only a few dozen to a few hundred votes on each one of these questions. So this is truly more of a holiday parlor game than anything I'd take too seriously. When they run the actual forecasting tournaments from which the super forecasters are derived, they're much more careful about having good representative sample sizes. And I think the teams are all made up of, I think, from 3 to 6 individuals, and it's much more robust. This is really more of a straw poll kind of thing. And it in a lot of ways, it actually kind of reminds me of that silly poll that's on the front page of the Value Investors Club, which never really seems to change by more than 5 points in either direction, right? Where it says, are you finding an average amount of bargains in the stock market, above average, below average? And it never really seems to move that much. I kind of wonder if the same thing is at issue here. Couple more. Headline Consumer Price Index in June of next year. My initial stab was about 3.8, 3.9%. That's pretty similar to where the crowd is at. Not a single person voted for anything between 0 and 2%. 18% of the crowd voted 2 to 3%, 38 voted 3 to 4%, 32% voted 4 to 5%, and 12% voted over 5%, which is actually kind of where we are at this exact moment. So everybody's kind of expecting, or a lot of people are expecting, a significant cool off, but nobody's expecting a cool off back to below 2% where we were, which I thought was pretty interesting as well. Let's see. Another one that kind of blew my mind, actually, in a negative way, was somebody posed the topic of, will there be a complex coordinated terrorist attack, a CCTA, apparently that's a well-defined concept, in the United States by a foreign terrorist organization with at least 5 fatalities before the 1st of September next year. I said that's, probably in any given year, a 1 to 2% probability at most. The crowd was at a full 5%, which is pretty scary and pretty astounding. It makes me wonder if I'm too sanguine about things, or if this crowd tends to view kind of nihilistically how the world might play out. I mean, that was kind of disturbing, given that that's not an every year or even every decade kind of occurrence. That was pretty disturbing. Back to the financial realm, one more that I thought was pretty interesting. What would you guys say the odds are that we hit at least 2.25 on the 10-year before the end of June next year? So by July 1st of 2022. So we're currently at 1.43, something like that today. What do you think the odds are that we jump all the way up to at least 2.25 by next summer?
I'd say generally pretty low. Call it like a 10% chance.
Okay.
I'll say 20, but I don't really think it's a free market. I think the probability would be a lot higher if it was a free market.
Yeah, it's interesting, right? Because we've just had the Fed announcement, and it seemed to be pretty much a non-event, whatever people were expecting. I threw a stab based on I put more time into this than I probably should have. I came up with 18%, and ironically and hilariously, the crowd was at 17%. And ironically, that's right in between the two numbers you guys just threw out there. So I guess everybody's kind of herded around that, which is kind of interesting. I wonder then if we're wrong and we should be widening the lens a little bit. There was actually another similar question about the closing yield on the 10-year Treasury at the end of next year. So just over a year from now, the 31st of December, 2022. And not a single person predicted negative yields in the U.S. Only 6% of the crowd thought we'd even get below 1%, which to me seems like a whole lot. I put it as a 20% possibility. I mean, we were there in the pandemic, and as we're seeing right now with Omicron, I mean, surprises are still out there. And to John's point, I mean, I don't think Fed policy has done a complete 180 to the Paul Volcker days in the last couple of weeks or months. So I don't know, going back below 1 seems like a very real possibility, and 6% seems crazy low as a probability. I had about 60% for 1 to 2%. That's exactly what the crowd had, but the crowd was at 33% in a range of 2 to 3%, and only 1% 3 to 4%. Which was really kind of surprising. And literally nobody forecasted a yield over 4%. And I agree, over 4% is very unlikely, but 0 is not a probability. So what do you guys think? Does that strike you guys as kind of odd too?
Well, I'd say the risk skews up, not down on the 10-year, given where we sit and how inflation, more so than deflation right now, is the concern. So I don't know. It strikes me as somewhat fairly balanced in a way.
Yeah, I think it's just striking to me that you have 93% of respondents said we're going to be between 1 and 3%. That just seems too clustered to me.
Fed's had pretty good control, but yeah.
Yeah, no, they have, but that's what worries me, right? Like things like this can be controlled for so long until they can, right? It just seems tough.
Yeah, but I would expect the skew to be more consistently up than down in an environment like this.
Yeah, no, fair enough. John, what about you?
Yeah, I agree with Elliot. I think, given where inflation is, the Fed can even let the rate go a bit higher, and it's still extremely stimulative because you still have negative real rates. So I don't really see why the Fed would want to blow a lot of firepower to drive it much lower from here. I think it can go higher, and it's still too low.
Yeah, interesting. I certainly don't have any answers. I just find the responses and the range of outcomes fascinating. These are two more that I came up with that were not included. So I'll tell you what I thought, and you guys can chime in. On the financial front, will the market, broadly defined by the S&P 500, have a down year in any year over the next 5? And because it seems hard to imagine, right? I mean, we just don't seem to have down years, let alone many consecutive down years, which used to be a real thing. So I put the odds of a down year at any point over the next 5 years at 85%. It just seems very unlikely that we're going to continue to dodge that bullet. And when you do the math of computations and permutations, it's just not that hard to get to where, you have a down year at some point over the next 5 years. Do you guys think that's too high?
Phil, you're usually the cynic in this bunch, and I think you didn't go high enough.
Really? Yeah, interesting.
Yeah, in the next 5 years to have a down year. Yeah, I mean, we, have had down years within the last 5, not by a lot, but it doesn't take a lot to be called down, right? So yeah,
no, I agree. I just think I think in the popular mindset, people have entered into this realm where, that's literally been like a certain sports oriented podcasting turned day trader, like stocks never go down. And maybe they've finally realized over the past few months that stocks do go down. But yeah, I mean, just the combination of unlimited, fiscal and monetary stimulus combined with recovery from the pandemic and whatever, I don't know. I mean, I guess I wouldn't be totally shocked if we have 5 consecutive up years from here, but it does seem really likely. So maybe I should have gone to 90 or 95%, but I don't know.
Yeah, one thing I think about is like, from, a lot of people do say we've gone straight up for the last decade, but from January 2018 through May of 2020, we had gone sideways. That's like basically 2.5 years. So we have long periods where not much happens.
You can have, yeah, I mean, that's historically, that's what's so fascinating. I mean, you've had 10 to 15 year periods, even post World War II, where the market's literally gone nowhere, and with lots of volatility up and down in between and lots of gnashing of teeth. And it just seems like it relatively optimistic. And I'm not one of these people who thinks we've completely lost our moorings in the broader security markets, even though you've got little pockets of just total insanity. But I do think valuations reflect, more good things than bad happening, which is normally the right attitude. It's just you're not starting from an artificially low point, right, where you could really bake in a reversion to the mean in the positive sense to boost those returns over the next few years. So it does seem like we're going to need things to continue to go right. And kind of going back to that Twitter poll I mentioned earlier, like if I had to put a gun to my head or something and pick an over under on the compound return annually in the S&P 500 for the next 5 years, I don't think I could really go above 4 or 5% in nominal terms, right? I mean, I just, could we continue at 6 or 7 or 8? Sure, it's definitely possible, but that wouldn't be the middle of my distribution, I'm guessing.
Yeah, well, Phil, I gave you a lower number on the S&P by June, so I guess you know where I stand on that. But at the same
that's only
time,
by June, then you'd come roaring back in the second half. Of the
yeah,
year
exactly. No, I mean one caveat I do have is that I agree with Ray Dalio that cash is trash, and so I don't believe the market is going to have another multi-year downturn. We're going to have it is highly valued right now, which is why I gave you a lower number on the S&P, and also just to put myself out there like an idiot. But I do believe that holding cash is a losing proposition, and you got to put that somewhere if you're a long-term investor. So that's really why over the decade, I do believe that equities and real estate and pretty much everything other than cash will go up.
You're definitely fighting a losing battle over a decade. I totally agree. You wouldn't want to hold a giant cash position for that long. And I do struggle to imagine the tidal change in mentality that it would take to get back to the bad old days where even people like Ben Graham were so scarred coming out of the Depression that any bounce was a reason to sell basically for a while there, right? Or where you got to the cover of prominent business magazines declaring the death of equities because it's been, 10 plus years of just pure misery and inflation's running high so you can get a decent return in bonds and that kind of stuff. It's just hard to imagine getting back to a world like that. But, that's when I try to really stop and force myself to think about it, because when something's been going on for a long time and a low probability but high impact event is out there, that's usually when you need to pay the most attention to it. And speaking of the last one,
could I just interject before we jump
Sure.
to the last one? I also think it's
please.
important to think about the fact that, saying there's going to be one down year within 5 doesn't mean you think there will be a down period over 5 years, right?
Oh, no, I agree.
So the market tends to move in these fits and starts. We went nowhere from 2018 through most of 2020 in aggregate. And yet, when you think about the what's happened, you then have a year where it's up 25%. So to average somewhere between 7 and 10, you'll have years that are 25 and years that are 0 or negative. And so that's just like the nature of the beast. Can't fight nature.
I totally agree. I think where I was shaking out on was I bet that if we could find a way to poll, tens of thousands of people across all walks of life that would even have an opinion on it, given what they've seen the last 2 years and the number of people that have come into the markets in the last 2 years, where at least in the US, the equity markets have risen despite all number of just bad, horrendous things that you wouldn't have imagined at the beginning of that period. They say, sure, what else could happen from here that would be worse? Like stocks never go down, right? Like that would kind of be their framework, right? Like I have a feeling if I'm at 85 or 90%, and you guys are there, maybe even a little higher, like I bet the general population would be way, way, way below that. Just my guess.
Yep.
Anyway, last one, and I'll turn it over to you, Elliot. But on a more hopeful note, do you guys think, or what are the odds you'd assign that 2022 will be better than 2021 from a COVID perspective? So in this regard, I'm counting total global infections, which is obviously a somewhat arbitrary benchmark and somewhat hard to measure, but it does really matter, right? Because, we can measure this a lot of different ways and it matters enormously depending on what country you live in and all that sort of stuff. But, if we're going to really put COVID-19 in the rearview mirror, you have to make progress on a global basis, of course, as you're seeing from the continued rise of the variants that roll out. So I put the odds that total infections will be lower in 2022 at about 80%, which I'm still debating. What do you guys think?
Well, I'm going to say that is like entirely the wrong question to ask when it's framed as better. Because I think, if you truly believe this thing's going to be endemic, and that we'll be better prepared to deal with it because people will have been vaccinated and, maybe who the hell knows for sure. But if Omicron's a more mild strain, better might very well mean way more people get it, but it's way more manageable.
Yeah, that's fair.
So I don't really want to answer the question phrased as such, because I truly believe if you think the COVID situation is going to be better, you also think there will be more cases.
Yeah, that's fair, because you do need to burn through it at some point. But to your point, you could also burn through it by getting more people vaccinated and warding off at least a majority of the potential infection. So yeah, I guess
it's showing that, vaccination, the foremost effect isn't necessarily
oh no, of course. Yeah.
Preventing you from getting it, right? It's
right. They're designed
a more mild case.
Severe illness, for sure. That's the original use case, and that's what they've been until now, hopefully continuing to prove out that that's what they're doing very well. So
my inclination is, we end up much better off as 2022 goes on, but it's about how we're able to deal with cases actually happening. And so there will be more cases, but we are better.
But I think the fact remains, I would imagine you'd agree, that if we had, let's say 100 total infections in 2021, and up until now, almost all of them were, or the majority of them were Delta, right? And then if Omicron spreads way more rapidly as it appears to do, and you had 400 cases in 2022, even with a lot less severity, that's just a lot more people getting sick, right? Which is not going to make it easy it's going to put a big strain on the healthcare system. It's going to make it difficult to get back to work and travel and all the things we want to do, even if it is far less severe than Delta, right? So I think the absolute level of infection does still matter, even though I share your hope that this could burn out quickly as a relatively mild strain that transitions us to the endemic phase sooner rather than later.
Yeah, and maybe my perspective's clouded because as I sit here in Connecticut right now, we have the highest rate of infection that we've had in this entire pandemic.
Yeah, a lot of places do, yeah.
We're the worst in the country right now. For much of after the first wave, we've been amongst the best. Yeah. But the good side of that is that our, hospitals, when we were at equivalent rates before, were full, and they are not now, and it's very low.
Which you'd hope, but it is still a burden, right? Like it still sucks for the hospitals and the doctors and nurses to have to deal with it again. And like this was just not
the amount of cancellation and closure notices that have been hitting my inbox in the last couple of hours is kind of snowballing exponentially.
Right. Yeah, it's a big strain on real people. It's a big strain on the economy and the healthcare system. And I just don't think most people were. I think a lot of people, myself included, were pretty hopeful, 80, 90% likely that Delta was going to be the last major variant wave. And it's just all been thrown out the window in the last couple of weeks. So, it's ridiculous and perilous to say with any confidence that next year will be far better, which is why I'm not going to ever go above something like 80%. But you would hope that with the continued rollout of vaccines and certainly with the continued development of therapeutics to reduce the severity of the actual infections that are incurred, that next year will be better no matter how you define it. So here's hoping.
Agreed. Yeah, better is just, we're able to deal with it better, it seems, Yeah,
we're going to have to. There's no doubt about that.
Yeah, I was going to agree with you, Phil, on the probability. I was going to say 75 to 80%, but yeah, it's interesting whether more is better or less is better. I think, getting through it is better.
Yeah, exactly. However you get over that.
Yeah, exactly.
Yeah, and I don't know. I mean, I really don't. I've been kicking this around, and I think people are tired of it and exhausted. I totally understand that. It's just, it's been a long 2 years, that's for sure.
Yeah, but certainly government policies don't agree that more is better. I mean, seems anyway. We're at peak infections in Switzerland right now, and they're doing more, right? More restrictions and so forth. So, yeah, but I think people are realizing that there's a silver lining to this new variant. So we'll see.
Let's hope. Yeah, I mean, the last thing you'd want is for people to get overly negative or despondent or something. I mean, it sucks. We just all have to fight through it, right? It's disappointing, but and it's tragic for a lot of people, right? I mean, there's going to continue to be lives lost and lives disrupted, and it's just hard to think about. So I wish there was a way to be more blindly cheerful and optimistic, but that's the world we've been dealt right now, and we all just have to kind of suffer through it for a while.
All right, over to you, Elliot.
Yep. Sorry. On that glum note, we'll go over to Elliot.
All right. Well, that is in the theme of what I was planning on talking about anyway, because, 2021 was one of those years where it was full of ups and downs. Starts with, the optimism of the vaccine and perhaps an end to the pandemic within the year. By May, it certainly felt like that was a distinct possibility. And, within a couple weeks from there, the Delta wave had begun, and we are very much still contemplating when we will kind of hit an end game and what it will look like. So, peaks and valleys, and being our last podcast recording of the year, I thought it would be appropriate to visit and speak to some of the lessons that so far I've had as my some of my big takeaways for the year. And I'm hopeful you guys will share some of yours as well. So here goes. One of the big ones for me, this environment is far more dynamic than any I've ever experienced. And even seasoned veterans I've spoken to said the same. So, appreciate and respect and have situational awareness for the degree to which there's dynamism in the environment. And, obviously there's always the unexpected that's likely to happen, but be cognizant of whether it is a more dynamic or static environment. And it's very much dynamic, remains still the case today. Number two would be, the markets reacted to seemingly obvious things that in theory I would have thought were priced in. So simply because something is obvious, don't think it's not worth acting on in some way, shape, or form. Don't ever think something's too obvious to work in one way or another. The next is one that I'm still not sure exactly how to respond to it. And it's one of the things I'll be reflecting on for more than just these next few weeks. And it's related to the dynamism of the environment and situational awareness. But I've had from the beginning as an investor a predisposition toward inaction. But I'm contemplating whether it would be helpful to be a little more nimble, if only at the margin. And I don't have an answer on that, but I think one of the lessons is at least think about that. Don't just say I have a predisposition toward inaction and, let that be that. Still, have a high threshold for action, but can be nimble within that. So it's something I'm going to be thinking about. Then next, I've talked about simplification and the role that plays to narrow down to one key KPI that really moves things. And I think this applies more, what I'm about to say applies more to new rather than old positions that I've been in for a while. But when that one KPI you think is most important doesn't do what you expect it to do, even if there are very rational reasons behind it, move to the side. Don't suck your thumb for a minute and wait to see how it plays out and wait for your signals to actually align. Next, be very conscious of factors in the market because you might be less diverse than you think. And that's something that's been humbling this year in a way. I knew my book had concentrated in certain factors and I was conscious about moving, some portion to different areas, but still, it's a very, I think the nature of the market's changed. And I do think it's important to be very attuned to the factors that you're exposed to. Next, when something in your gut is telling you to do something in an area you have a lot of experience, act on it, don't sleep on it because you might not have enough time. I think this is exactly where System 1 is primed to work. And I'd emphasize only in an area where you have a lot of experience, where you're acting very much within your competence. So believe and trust in System 1. Next, people are way more resilient than we ever think, than I ever thought possible, right? People are truly resilient. What we've gone through these last 2 years, how many things have happened early in the pandemic, very early in March 2020, I was thinking it might look like a general strike insofar as the economy is concerned. So even in aggregate, like people and the systems we built, they're resilient. We respond to things. Things end up working. But there is a flip side to that also. Just because we're resilient doesn't mean things are easy or without challenges. So appreciate that. Talk to the people you love. Make sure, you help them. And in doing so, it'll help yourself. These challenges affect us all in very much the same ways, whether someone shows it or not. Next, productivity has nothing to do with how much time you have. It's one of the really big things I've learned in the last 2 years, because early in the pandemic, I had much less time than I've had more recently as the kids have gone back to school. And I haven't felt like my productivity level was much different in the two distinct periods. It's entirely a function of focus and energy. So put yourself in a position to be focused and have energy, which includes taking some breaks and stepping away. And then the last that I've really marveled on is, even in times of isolation, like whoever thought we'd go into lockdown state in our lifetimes for, anything really. But even in isolation, you can feel very connected to the people around you, to your world. And some of that's entirely fueled. Not some of that. That's fueled by technology, but it's truly incredible. And, you could be alone without feeling lonely. And I think that's pretty powerful. But that also doesn't mean you don't feel lonely in different ways. Like social connection is extremely important. And it's been incredible to, get to see people after a long time without having done it. And the emotive force behind that is really powerful. So harness it, treasure it, and, remember what we've all gone through. So, I'm optimistic that 2022 is the year we round the corner, to riff off of what we last were speaking about in Phil's section. And, I think these are some of the lessons I've reflected on. I don't think I'm done making my list of lessons for the year. But I think, these are the important ones I've been focused on as the year's coming to a close. How about you guys?
Yeah, that's a pretty impressive list. I share the optimism, by the way. I don't mean to bum people out. I hope my last section wasn't too depressing a note to end here, particularly as we go into the end of the year. I am inherently always glass half full, and I think the world will continue to make progress. And a lot of the negative things that get drawn to the forefront right now are a lack of or due to a lack of focus and attention to the real numbers and, the real state of humanity and where things stand. So I think I share your sentiments there. I share your sentiments on pretty much everything you said there. I thought there was a lot of good stuff on that list. I made a list of the big lessons I learned in 2021. In a lot of cases, it was just pounding in lessons that I've neglected in the past, or things that I knew in the past but just didn't appreciate. We've talked before about how in the past, 5 or 6 years or so, I finally understood the lesson about not fooling yourself, and you're the easiest person to fool. And likewise, I feel the same way about a lot of the things that I learned and relearned this year. And I guess starting right at the top, it was right in January. It's that markets can do absolutely crazy things. If you had told me in advance what was going to happen with GameStop and AMC and the meme stocks that all went bananas, look, it's really not unprecedented in a lot of ways. I mean, the way it unfolded was, of course, unprecedented because we didn't have things like Reddit and Robinhood before, but there's really nothing that unusual about it in the broader arc of history and in terms of people's behaviors in the markets. But it was still absolutely insane to watch that unfold. And the lesson we have to take away is that you just have to be careful that you're not leaning down, scooping things up and coming in front of an oncoming freight train, and that you're risking getting killed for, relatively small returns. I mean, the lessons to leverage and shorting and concentration and counterparty risk, factor exposure, whatever the case may be. I think those lessons are absolutely worth remembering because, you can imagine having a well thought out thesis and then watching something like this go against you and just watching your entire portfolio or business get torched in the matter of a few days or a few weeks with something like this. That would be beyond infuriating, but it happens, and we all have to try to do as much as we can to avoid it. Likewise, the importance of psychology and incentives and social influence. I think, again, it's just stunning when you see how powerful it is and you see it play out in real time. And I'm not just talking about meme stocks, I'm talking about everything. And it ties in with another big lesson, which is just how unpredictable things are, right? I mean, you would have not 2 years ago, you would have gotten a lot of strange looks if you predicted things like the COVID-19 pandemic and the January 6th riot at the United States Capitol and the political environment that we've gone through and the social unrest we've had and, the fiscal response and the economic response. All the things that have happened were fundamentally unpredictable. And yet here we are, just like I was a minute ago, there's this human need to try to control that uncertainty and the human need to try to boil it all down into something you can wrap your arms around. And you just have to keep coming back to the lesson that almost all the things that are going to matter are unpredictable. And, it's just a fact of life, and you just have to learn to deal with it. And I guess my last big lesson and takeaway that I've learned is a concept I've come to call otherwise, which is just this notion that it didn't have to be this way. Right? It could have ended up otherwise. Things could have happened differently. The ball could have bounced left instead of right. history is not predetermined, right? Counterfactuals matter. It can always be a whole lot worse, and it can always be a lot better too. I mean, this is not some sort of predetermined thing that, it's obvious that, this price went to this level, or this company had success or failure, or this person got the job or got elected, or there's all sorts of randomness, all sorts of things playing through a very complex interrelated system. And so I just keep trying to remind myself, this year's a good example of it. Think through as broad a range of probabilities and scenarios as you possibly can, because that's the only possible defense you're ever going to have. John, what about you?
Yeah, great lessons, guys. I think certainly the point on irrationality stands. I think I felt that there's more irrationality out there than a rational person could even imagine. And so it's very dangerous if you try to get in front of that or bet against it. You could get really crushed in the short term. And I recall that quote. I think it was Albert Einstein who got really worried when humanity invented nuclear weapons, because it was basically the realization that our technology is so advanced, but we as human beings are not any more advanced than we were 1,000 years ago in terms of, our psychology, let's say. And I feel a little bit like that with markets right now. There's so much accessibility through apps. There's so much information out there, but there's really nothing has changed in terms of human psychology. And so you've just created ways that people can really hurt themselves more and mess up their lives much more easily than in the past. I also feel like many more investors than ever are playing the beauty contest. That's probably just a function of where we are in the market cycle. But you see, even among professional investors, it's not uncommon to have them explaining why they're doing something or basing their decisions, at least in part, on what they think the apes might like next. Self-proclaimed apes, by the way. This is not an insult. There are actually people in the market who call themselves apes. You take something like cryptocurrencies. I don't understand it, but when you look at things like Dogecoin, Doge's wife has a value, apparently, the coin, I mean. It's just proof that anything goes, at least for a while. And, you think about crypto, yeah, it could amount to something, but it could also be completely worthless. I mean, all of it, cryptocurrencies, blockchain-based things. I have not seen really people explain very well what the problem is that these things solve. And so you have a lot of companies built on top of what could end up being a worthless house of cards. I think we've also realized that regulators will not protect you. You're on your own. I think regulation is all about disclosure and not about preventing bad things from happening. I mean, I almost feel like a company could literally, in its disclosure, say, we will rip you off and take your money and burn it. And that would be just fine with the SEC. And a lot of folks wouldn't read it, and that would be that. So I think also with the political elites, I think it's all about their own personal careers. I don't think the Fed is really thinking about what's best for the long-term future of the dollar or the country. I think Nancy Pelosi cares more about her stock portfolio than about her constituents. One other thing personally for me, taking losses with no emotions and no pride. This used to be a problem for me in the past. It cost me a lot of money. Over the last year, I've really succeeded in taking losses without any emotion and just having the confidence that I can make money on average over time. And so taking a loss is not a problem. I would say, just keeping in mind the saying, if it's too good to be true. In other words, don't get greedy, especially at this point in the market cycle. And if I talk to folks who really have no business being in the market, but they think that somehow by trading they can make a living and a good living and don't have to work, I mean, that's just complete nonsense. I think ultimately invest in yourself, know more, think more. And for me, also spending some time in solitude. I think I've spent more time in my own head than ever in 2021. And it's been great because you get non-consensus ideas, you get creative ideas, you're not so influenced by what everyone else is thinking. And so I've just found it really helpful to just spend some time disconnected and thinking. So that's it for me.
Wow, that's a great list.
Yeah, really great stuff, guys. Thank you so much. And that's such an interesting point on solitude. I'm glad you said the part about disconnected, because I feel like a lot of solitude has ended up being connected for some people, and the disconnected part's huge. And Phil, I'm glad you said the word relearned when you started yours, because that was just something I meant to emphasize with a couple of my lessons as well. And that's the truth. Sometimes you have to learn something more than once to truly have it hammered home for you.
Or like I'll read about it or hear about it and I'll know theoretically about it, but I just have to have it hammered in 2 or 3 times before it finally takes effect.
And sometimes you have to learn it for yourself. It's one thing for someone to tell you something or to read about something, another to actually, do it.
Right. Exactly. Yeah. So, and I agree. And one thing I wanted to ask John about your list, one of the things that stood out to me about the things you mentioned, or most of the things you mentioned pertaining to the external environment, and this gets back to something I guess we've talked about a few times, but how many of those issues do you think that you cited are cyclical and come around every so often for whatever reason, right? This suspension of disbelief, this willingness to sell people, a bill of goods, the willingness to just think, I'm going to stake everything on what could be a house of cards. I tend to believe that politicians have always been feckless, power-hungry individuals that don't really care about anything else. So, like I said in my comments earlier, I mean, there's certainly been periods of time before that closely resemble the GameStop AMC and the apes and that whole phenomenon. So as shocking as it is to me at times to wake up and realize that people are doing things that I regard as just so irresponsible and crazy and irrational, one, I'm prone to the same things. And two, it's like this has been going on for so long that I wonder if this is just a passing phase, for lack of a better word, or do you think this is different than that?
Well, I want to hope that it's cyclical, that it's a sign of just where we are in the market cycle. But I do have the fear that it's more than just cyclical because of, the tools that are out there, the way people are consuming various apps. I mean, I just see it with my own kids, this problem with social media addiction, and there's just issues that I think are going to be with us for years and decades to come. And, to the extent that today's kids that are so addicted to Instagram and all those things are going to be investing in the stock market, they're going to, it's going to be really hard to have them take a rational long-term approach. Everything seems to be gamified these days. So, we'll just have to wait and see. But I do think that something fundamental has changed, just given how the penetration of the internet and technology has affected, the way people think and spend their time.
Interesting.
Yeah, I agree. That's something that we're all going to have to contend with in various ways. And I've reflected on one of the things that, we used to we had big restrictions on screen times that our girls had before the pandemic. Like, there weren't even restrictions. It was just not habitual to have screens in front of them that regularly. But then early on, when we had these stay homes and my wife and I both were trying to get work done, one way to do it is to turn on the screens and let them be distracted for a little bit. And once you do that, there's no going back. And it's one of those things that you lament, but you're like, how was there any other way? And how do you reverse that now? And we're trying our best. Part of it is to get activities going again. And that's one of those things that, has really been very uplifting, seeing them engage in some of the activities they did, like ice skating starting again, But I think it's a challenge a lot of people are going to have. A lot of, I'd say, unhealthy habits have emerged from the conditions of the last couple of years.
Yeah, I agree. I've certainly been struggling personally. We've been struggling with the same issues. I just try to keep the perspective, I guess, that every era, every age has its own set of challenges and struggles. And I agree, John. I think it's one of the things that is genuinely scary, and you can get into all sorts of debates about the future of humanity and the singularity if we're all in a big giant simulation or whatever. But it is interesting when people start outrunning their own cognitive abilities with their physical or virtual tools even. I mean, to your point about trading and information availability and the psychological ramifications of that, I mean, it's not that much different than the leaps and bounds progress is the wrong word, but the advancements in military technology of the last century, right? I mean, our ability to kill people on a mass scale has gone straight up for 150 years or something, and that has scary implications. And likewise, I think the rise of certain technologies that are prevalent today have negative implications. But again, I still think people don't change that quickly. And I think at the bottom of it, there's still reason for optimism with a whole lot of sobering moments along the way.
Yeah, there's definitely reason for optimism. I think we have to end it on an optimistic note. And I'm sure we'll explore a lot of these topics more in the future. Elliot, last words?
Yeah, I mean, in the optimistic note, I mean, I truly believe that when we can say, and I don't know how it happens, that the pandemic's behind us, it's going to become the roaring 20s of sorts, not in the financial sense, but in the live life and don't expect there to be second chances on anything, go get it. And I get this sense from my peers. And, I think that was one of the experiences of the summer, of May through the summer, when things were definitely looking better. So I think, that was a preview of what's to come more so than anything else. Though, as we sit here in winter and COVID numbers getting worse, it's easier to reflect on some of the challenges than to look forward to what I truly think is on the other side of this.
For sure.
Well, here's to a roaring 2021. Let's see what happens. But thank you so much, guys. It's been so much fun hosting this with both of you this year. We're going to reconvene in January, and I just want to thank all of our loyal listeners for making this part of your week. We are truly honored that you take the time to listen to the three of us share our thoughts. Thank you, and take care for now. Happy holidays. Talk to you soon.
Thank you for listening to This Week in Intelligent Investing, brought to you exclusively by MOI Global, the research-driven membership organization. Learn more at moiglobal.com.